Hello everyone, Dr. Stock here. What an exciting day in the markets. Today I want to take a look at the week in review, including what a strong note to finish on. And well, I'll give some of the commentary on what I've said in my previous videos and what I see going forward for the markets. So check out this video. I think that you'll like the information that I have. Real quick, before we get started, check out this link that I have for you for Moo down in the description. Click that link, download the app, sign up, and if you make a deposit of $100 or more, check this out. You get up to 7 free stocks. This offer does expire, so don't wait on it. March 31st is when you have until. In those stocks, you get AI as guaranteed, and that one just had like over a 34% pop today. That was pretty cool to watch that happen. And BBAI is also another one of those stocks, plus 5 other free stocks. If you deposit $1,000 or more, you get 17 free stocks, which part of that includes those 2 stocks, AI and BBAI. So check it out. This offer does expire, and it is available through my channel. Let's move on. Also, check out that link down in the description for my Patreon. Click on that link, sign up, get access to my Patreon exclusive content, as well as access to my private Discord community that I have over there. We'd absolutely love to have you. With that said, let's get right into the content. All right, so just a look at the markets that we have, and there's a few things that I want you to see. One, Dow Jones, look at all that green that we have, closing up above 1%, 1.17% for the day. In the Dow, NASDAQ up almost 2%, just shy of 2%, and then the S&P up about 1.5%. Just a really incredible buying day that we see in the stock market. Look at the heat map that we have for all the different industries. We have discount down less than 0.5%, beverages down less than 0.25%. Everything else is just green to bright green on this map. I mean, we have internet and content and information coming in at 2.5%, consumer electronics at almost 3.5%, software almost 2%, semiconductors, that's also in here, 1.75%. I'm not going to read them all, but like you don't see that in heat maps. They usually have green and red patches on the thing, but to see them all go green like that, like I said, it was just a very strong day in the markets. Let's move over to the SPY. All right, so with the SPY, I want to point this out that, let me zoom out just so we can see the trip that we've made. So here's a really big view of the SPY from a long time ago. This dates all the way back to 2008. So you can see the pandemic and everything. So let's zoom back in now to more recent price action. So we stuttered right about this level, dropped back off, touched down 375, and then moving back up. We peaked around here, and that's that beginning of February time, right around the FOMC meeting, and we sort of kind of trailed off after that time. A lot of talk about inflation, recession, economic slowdown, you name it. And we just sort of trailed off. And really, in my opinion, we had a lot besides we had the CPI, we had the PPI come in hot, and those things were not great for us. PCE confirming that story, sort of like what we expected from the CPI. And these last 2 days were actually pretty good for us. So I said the 200-day could act as really strong support for us. We didn't quite get there, but we almost did in the SPY. We broke below the 50-day. They said that could be resistance. We broke up above, we gapped above it in the SPY today. And I said that if we make it up above 4,000, we could see higher levels in this. Otherwise, if we didn't break 4,000, the next direction in that case, in my opinion, would be down. So we didn't quite make it there. I do want to show you something though, as I was mentioning. So let me snag this and put on array. In my live streams, the Stock Moe, I was talking about the bullish channel that we sort of have forming here. In the case that in the short term, we could probably go just a little bit higher. So with this candle aside, yeah, that's the bottom, but off the other bottoms that we have, I think show this trend a little bit more. I said we could possibly trade in this upward channel for a little while. So far, that's what we've been doing. We nearly got there. We're bouncing off of it. You could go back and watch the live streams of Stock Moe, and I think if it wasn't in our last live stream together, it was in the one before that. I think it's the last one that was over at his channel. So go over and see Stock Moe. Go to his live videos on his channel, and it's the last one that we did together. I think I drew that onto the charts. We bounce off of it. We're coming back up. It is possible. We're going to have to watch and see. March 14th is closer than we think. Today's March 3rd, 11 days. So we have one full trading week between now and the next CPI reading that comes out on March the 14th. I don't think that we make it up to this next high, but if we're going to continue drifting higher from where we're at now, we have at least another % to go before we run into any real sort of resistance, in my opinion. That would be for the SPY over the coming week that getting up there would be pretty reasonable, especially if we see another strong green candle like that. That could be a 3 white soldiers, and that could be a bullish reversal for us that sends us back up. And maybe we do come back and test some of these higher highs that we had before at 412 maybe. So that'd be about 2% up in the SPY from where we're at, possibly even coming up to 418. So if we make it up to there, that's going to be pretty hard resistance for us. That was after a pretty good run in the markets. So making it up that high, up to about 418-ish, 416, 418, that'd be a 4% gain from where we're at in the markets right now. There would have to be a lot of really positive belief, a lot of positive consumer sentiment, investor sentiment going into the markets to keep it rallying that strongly. So I don't know if I'm that bullish over the short term. I guess it could happen. We could keep trading in this channel, especially if the CPI comes out and it's much cooler than expected, where, okay, January was a one-off. We're actually not as bad as we thought. If we get confirmation that January was just as hot as inflation is really showing, that we get 0.5, 0.6% month over month in the CPI, and the PPI also comes in, what was that, 0.7 maybe, I think, for final demand. I can't remember off the top of my head what it was, but that was another high reading for us. So if we stay on trend to go higher, if we confirm that inflation is not only sticking around longer, which we believe that it is, but also that it's even hotter than we thought it was, that we go up above that 0.6, up to 0.7 in CPI, for example, would be, and I'll make a video separately on CPI, but that could be something that could be really detrimental to us. If we keep getting these reports that the consumer's strong, that the economy's strong, we got the manufacturing reports today that showed that the economy is still growing, like that was a good sign. That put a lot of upward momentum into the stock market today, and I showed you all the green that we had. So, bullish channel, we could definitely play this out. You know, we could come back up here and possibly, if we break this high right here, like, we got a bit more room to go from there. Another 2.5% before we reach the next peak. Even if I zoom out, I don't think that changes the story for us. So let's zoom right about there, I think is a good look. Yeah, that's going to be pretty heavy resistance for us. And that's about 4.5% up from where we're at. And that would be really, really super green in the market. I said in my other videos that I can see a case for March having a little bit of upward movement to it. And I know that some people call me crazy for that one. We're seeing a little bit of it now. Maybe it keeps going. We're just going to have to watch and see just how much we get. At least another 1% to 2%, I think, is very reasonable. Do we get that 4.5% in March prior to the FOMC meeting? Will the FOMC meeting be that thing that smacks us back down and keeps us from hitting any of these higher highs? Will inflation be that thing that keeps us, that turns things around for us? So we have a number of factors that can either keep us moving up. That would be that we get strong economic signals, that we get weak inflation signals leading up to that Fed meeting. If we see further strength about inflation, that it's coming in hotter, the market's going to drop right back down, in my opinion. That's if they come in as high or even higher than what January came in at. That would be bad for us. If they come in lower than January, and sort of, even if it's still just barely below it, I think that the market will kind of be okay with it. We're going to have to watch and see if they come down to more of those lower levels that we've seen, 0.3, 0.4%, for example, for CPI for core or for all items, especially for core, 0.3, 0.4%. I think the market would see that as a very good sign that January would just happen to be one of those high times and that we are settled a little bit more than we thought. So we're going to have to watch and see. We're going to have to plan that as it comes out. I will put out my CPI video where I take a number of different sources, history, and then I have 2 other sources I want to talk about, especially based on what people have talked about in the comments. I want to bring those in and reconcile those into sort of a single perspective, try and get a better idea of what we're going to see from the CPI. So on to the Qs. We actually bounced off. Wrong way. There we go. We bounced off the 200-day. I mentioned that in my last video. And, well, just another strong day. We got stopped out just below 300 on the Qs. We broke up above 11.6 on the NASDAQ itself. So breaking up above 11.6 is a very good thing. Hopefully, we stay there for a little bit of time. And we do have a decent amount of room. We have room for like 4% from where we sit right now up to our previous peak, somewhere around there. Honestly, we have room for about, I would say 3% would be easier to get in the NASDAQ than getting that. Well, if we see 2% in the SPY, we could easily see 3% to match it up in the Qs. That could totally happen. And then squeaking out that last percent to get up to the previous peak. listen, if we don't break that peak, then we have a double peak, that M shape, if you want to talk about it that way. And that could be something that's a bearish sign for us if we fail to put in a new high. And while that doesn't mean that the market drops back down and it retests previous lows, that could be something that maybe we end up trading sideways for a while and we end up stuck in a horizontal channel. So we're going to have to watch and see if that happens. I said the 200-day could serve as really solid support for us, and we didn't quite touch it on the SPY, and that's okay. We did touch it on the Qs, and well, we see the strength coming out of it anyway. So let me summarize. The markets, they could possibly still rally a little bit more from where they're at right now. We had 2 strong days in a row. Maybe next week continues its strength, and then maybe we get a little bit worried the following week about CPI and PPI, which is March 14th and 15th respectively. So watch out for those. Next week, watch out for Jerome Powell's speech on Tuesday at 10 a.m. I don't know that he's going to say anything that's really going to be all that impactful with his testimony. I don't know that we'll get any real news from it, but I think that we definitely should watch out for it. Other than that, we have another one of his testimonies. I think it's on Wednesday. Wednesday at 10 a.m., Fed Chair Powell testimony. Also then, we have some job reports. We have some mortgage information, job cuts, initial jobless claims on Thursday. Let me see what else. Unemployment rate. We don't really have, in my opinion, a lot that's really in our way. That non-farm payrolls report that we get for February, that's going to be important to us, actually. So maybe 8:30 a.m., that's Thursday, March 9th. We want to watch that. If we get another strong number like we saw when we got surprised in January at 517,000, February is supposed to come in at 200,000. If we put in another 500,000 jobs, oh my gosh, we're going to have to watch and see if that comes in another very hot jobs report for us. That could be something that rattles markets. So this past week was a good week. It was a great way to finish the week. I think next week stands a chance to be a pretty good week as well. The week after that, I think, is where we could start seeing some red, especially leading up to CPI and PPI. Maybe they're those things that bring us back down and we retest some recent lows. Maybe they're those things that keep us rallying just a little bit longer leading up to the FOMC meeting. We're going to have to watch and see as that comes out. Like I said, I'll put up my CPI video. I'll do a PPI video. I'll have those all ready for you. If not this weekend, then next week. I got a lot of stuff in the works here, and I look forward to bringing it to YouTube. Thank you guys for listening. If you liked my commentary, would like to hear more, check out the link for the Patreon down in the description. Click the link, sign up, be part of the community, check out the Patreon exclusives, and also, while you're down there, get that link from Moo, sign up, deposit your money, get your free stocks, and thank you for the support that you've shown this channel. I really appreciate it. Hit the like button to help out that algorithm. Hit the subscribe button if you haven't, and ring that notification bell to see anytime that my videos come out. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.